Hi, my name is Fred Fisher, and I've been a professional liability specialist for the past 41 years. For the first 20 years of my career, I reviewed insurance policies as a claim person in the resolution and adjustment and investigation of professional liability and specialty line claims. At any given point in time, depending on the facts of a particular matter, my firm and my employees were constantly reviewing insurance policies to see whether or not a claim was covered or whether newly obtained facts might adversely affect coverage. For the last 20 years, I was a professional liability insurance broker. That was the model we followed, and we provided professional liability insurance and director and officer liability insurance on a wholesale basis. But that's not really what we did. What we did is we tried to provide financial security to our customers. And we did that by reviewing the policies as we did as claims people to see whether or not a particular claim is covered, or would be covered, as the case may be. As a result, in reviewing the policies that have since been coming out into the marketplace, we were always finding any number of gotchas and ambiguities that needed to be fixed and cured so that our insureds and policyholders and customers were not facing unnecessary litigation because of a claim position being taken by an insurer. Unnecessary litigation harms everyone. It is not included in the actuarial model. As a result, you can have a situation where one actuarially anticipated claim gives rise to four. The presentation you are about to review is the first in a series of videos I intend on making on educating the public and retail brokers as to some of the issues that exist in specialty lines. This first particular presentation is on the dangers lurking in professional liability and specialty line policies. The dangers are not unique to any particular given type of hazard. These are gotchas and uncertainties and ambiguities that can exist in D&O policies, employment practice policies, cyber policies, and professional liability policies. I hope that you, the viewer, learns a lot and that you will participate more in educating yourself on how to best serve your clients. This will be the first in a series of videos and educational presentations we'll be putting out, and we hope that you enjoy it. Thank you very much.
Isn't it interesting that we have spent some time looking at the insuring agreement on page 1 and how it may or may not be properly coordinated with extended reporting provisions and claim reporting requirements? Nonetheless, we haven't even looked at the definition of claim, which can be equally dangerous for an insured, especially when dealing with a claims made and reported policy. As you know, the claim must be first made during the policy term, and the claim must be reported to the company during the policy term. On screen now is a typical definition of claim that appears in the definition section, which you can see means a written demand for money or services, etc. Another version of that is claim means a written demand for loss because of a wrongful act or any suit. The problem is that since this is a claims made and reported policy, there's no requirement that it be received by the insured. So in these two examples, how does the insured report something he does not know about, yet the policy's already been triggered? And as we've already mentioned, the most dangerous time for a policyholder involving a claims made and reported form is at or around renewal. So here's an example of where a policy's been triggered, the insured doesn't know about it, and when he does find out about it, will he still have time to report the claim in a timely fashion? Here's some more examples of this, though. Another version of claim, as you can see, a demand for money, any judicial or administrative proceeding, any request to toll the statute of limitations. Again, none of these require that the insured have received these three items. Now, some policies with this kind of language may have a catch-all phrase at the end of the definition, where it says, and you can see it in red, a claim shall be considered first made when any insured or the insured's representative first receives the notice. Well, is that language there or not? But in the absence of that language, again, how does the insured report something he does not know about? That can be extremely dangerous. Here's some more definitions. And as you can see, many of them, again, do not require the insured receive it. The first one does. It means a demand received by the insured. But it goes on to say a threat or initiation. Has he received it? Next definition also requires a demand be received. But this one doesn't. The third one doesn't. The fourth one doesn't. However, it does include that if it's a lawsuit, includes the service of a suit. Obviously, that does require receipt by the insured. This definition, claiming a demand for money or services or a suit, again, no requirement the insured having received it. And finally, the last one, again, does not require that the insured have received the claim or lawsuit. So, again, how does he report something he does not know about? This, again, is one of those gotchas and subtle problems that can exist in a claims made or reported form.